Thank you. Good evening, everyone. Welcome to Q3FY18 conference call of DB Corp Ltd. We will be sharing the key operating and financial highlights for the quarter ended 31st December 2017. We have with us today the senior management team of DB Corp Ltd, Mr. Pawan Agarwal, Deputy Managing Director, Mr. Girish Agarwal, Non-Executive Director, Mr. P.G. Mishra, Group CFO, and Mr. Prasoon Kumar Pandey, Head Investor and Media Relations. Before we begin, I would like to state that some of the statements made in today's discussion may be forward-looking in nature and may involve risks and uncertainties. Documents relating to the company's financial performance have been mailed to you. I invite Mr. Agarwal to share his outlook on DB Corp's performance for this quarter.
Thank you, Malini, and good evening, everyone. We would like to share some key highlights of our financial and operating performance for the quarter ended December 2017, post which we will be happy to respond to your queries. Starting with performance for the first 9 months of this fiscal, total revenues grew by 1.4% YOY and stood at rupees 17,778 million as against rupees 17,528 million generated during 9 months last year. Advertising revenues grew by 1.3% YOY to rupees 12,565 million from rupees 12,406 million during 9 months of last year. I would like to state that the headline numbers might reveal a subdued performance on a YOY and quarterly basis, but the point to be kept in mind is that last year's number includes number of one-offs, which skews the performance to a large extent. EBITDA stands at rupees 4,824 million as against rupees 5,418 million in the 9th month FY 2017. EBITDA has registered growth, excluding last year one-offs and circulation expansion strategy related expenditure. PAT for 9-month FY18 stood at rupees 2,669 million as against rupees 3,106 million generated in 9-month FY 2017. PAT has registered double-digit growth, excluding last year's one-offs and circulation expansion-related expenditure. Our circulation expansion efforts have added almost 6 lakh copies since the initiation of the expansion drive in July 2017, that is 12% growth on a high base of circulation copies despite increasing of cover prices. The number of copies in July stood at 50.41 lakhs, which increased to 56.39 lakhs copies in December. We've been able to maintain the momentum during the current month as well and have reached 57 lakh copies per day through intense circulation campaigns. The focus is now on retention of subscribers through strong reader engagement. Moving on to quarterly performance, total revenues stood at rupees 6,025 million as against rupees 6,309 million reported during corresponding period last year. Ad revenues for the quarter stood at rupees 4,263 million as against rupees 4,530 million reported in Q3 of last fiscal. Advertisement revenue has registered growth in quarter 3 after excluding last year's one-offs and festival days billing difference. Circulation revenues also grew by 6% and stood at rupees 1,319 million as against rupees 1,243 million generated during Q3 FY17, mostly on account of volume growth from mature markets. EBITDA for the quarter stands at rupees 1,434 million as against rupees 2,019 million reported in Q3 of last year. EBITDA has registered mid-single digit growth during current quarter after excluding last year's one-offs in revenues and expenditures related to circulation expansion in legacy and Bihar markets. PAT for the quarter stood at rupees 781 million as against profit of rupees 1,181 million generated in Q3 FY17 after factoring in the above mentioned items. This quarter, we continued to focus on 2 core areas that we identified earlier, the circulation enhancement and product strengthening initiatives. Both these efforts are progressing well and the outcome has been impressive growth in our circulation. Press in India Report 2016-17, launched by Registrar of Newspapers of India, maintains Dainik Bhaskar newspaper as India's largest circulated multi-edition daily. We have maintained our leadership in legacy markets of Madhya Pradesh, Chhattisgarh, Chandigarh, Punjab, Haryana, urban Rajasthan, and urban Gujarat. The second phase of our Rest of Bihar launch has been completed, and Dainik Bhaskar has now extended its reach to entire 38 districts. Riding on a strong product and our brand strength, we are determined to achieve greater progress over the next few months. DBCL's non-print business continues to create stronger bonds with its digital and radio audiences through some very unique activations. Our strategies are yielding results, and DainikBhaskar.com continue to maintain #1 spot for Hindi news website. DainikBhaskar.com continues to remain #1 Gujarati news website. Our page views for the month of December 2017 were 1.3 billion, while our unique visitors for the same month were 79.1 million. DBCL's radio business continues to be the largest player in the rest of Maharashtra and #1 player in Chandigarh, Haryana, Punjab, Rajasthan, Madhya Pradesh, and Chhattisgarh. Our radio advertising revenues for this quarter stood at rupees 336 million as against rupees 363 million in the same period last year. EBITDA stands at rupees 97 million. We have undertaken several efforts to drive business growth to support the editorial and sales teams and build a more impactful leadership to unit connect, all of which are strengthening our internal efficiencies. Our focus is towards achieving stronger ad sales, and with the team's efforts, we are confident of reporting stronger performance. My colleagues and I will now be happy to respond to your questions. We look forward to continuing our interactions, and please contact our Investor Relations Department headed by Mr. Prasoon Pandey for all further requests and queries. Thank you. Thank you.
Thank you. So shall we open the line for Q&A?
Yes.
Thank you, sir. Ladies and gentlemen, we will now begin with the question and answer session. Anyone who wishes to ask a question may press star and 1 on their touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handset while asking questions. Ladies and gentlemen, we will wait for a moment while the question queue assembles. To ask a question, please press star and 1. The first question is from Vivekanand Subbaraman from Ambit Capital. Please go ahead.
Hi, thank you very much for the opportunity. I have two questions. One is pertaining to the advertising environment. I understand that you had several one-offs in the base, and hence ad growth was impacted. But even otherwise, your ad growth doesn't seem to be reflecting any buoyancy, notwithstanding the base being that of the demonetization quarter. And of course, there being elections in Gujarat, so one would have expected a better yield-driven growth there. So what are your thoughts on the ad environment, and why is growth so weak, even adjusting for the one-offs? That's question number one. Secondly, the circulation increase that we have seen, which are the key markets that have driven this increase, and how much time do you reckon will this take to translate into advertising growth as the response for the local advertisers also improves, and potentially your IRS numbers also come through? Thanks.
Yeah. So I'll take your ad growth question first. Frankly speaking, we are not happy with the performance. I can give you a few data points on that. As you know, overall, we are down by 6% in this quarter. And the largest category, those who are down, is real estate, down by 40%. We have education category down by 7%, electronics down by 20%, and so forth. Couple of categories, those who maintain themselves, is government, response category. The healthcare category has shown a growth, overall. But furthermore, if we dissect this quarter into month-wise, which is October, November, and December. So in the month of October, because the festival season last year was entire October, and this year 11 days fell into second quarter, September. So around 40 crores of money of October actually shifted to the month of September. So that's about the October. But if we look at the November month and December month, in November we showed a single-digit growth, and in December we have achieved a strong double-digit growth. And further I can say, as we are sitting on 18th of January today, we are still maintaining the strong double-digit growth, around 15-16% in the month of January till 18th. So with this hope, and the categories those who are performing, like real estate, I can say, has started coming back in the month of December and January. Lifestyle category also has shown some positive trend in the month of December and January. So with this hope, and education also, because this quarter is going to be education quarter, so we are very hopeful that this quarter we should be able to show a pretty good growth. Coming to your second question on the circulation growth, as you know, we have, if I give you the breakup of the 6 lakh copies, almost 3 lakh copies have come from the Bihar expansion, and balance 3 lakh has come from our existing markets of Rajasthan, Gujarat, Madhya Pradesh, largely from these markets. Time for the revenue generation, as in past we have seen, it takes around 6 months for the retail advertiser to start giving us the benefit of that circulation, and the corporate national advertising, which constitute around 35% of our overall advertising revenue, takes almost a year plus. Thank you.
Right. This was very helpful, Girish. How big is the real estate category for you now, after the category has declined for so long, and which are the large categories that still seem to be struggling to your mind?
So real estate currently is at 5%. So this category is actually pretty in bad shape. Another category which is struggling, which is number is down, is response category, which would have been higher. Electronic and electricals, and the lifestyle category. These are the category, and education also, the one those who are struggling.
Right. I have more, but I'll come back. Thanks.
Thank you.
Thank you. A reminder to the participants, to ask a question, please press star and 1. The next question is from Vikash Mantri from ICICI Securities. Please go ahead.
Yeah, good afternoon, sir.
Good afternoon.
On the private treaties, I remember we stopped this business 2 years back.
Very true. This last year, 12 crore, 11.87 crore was the Gitanjali, which we had closed last year, and we published the final ads and booked the income.
So,
as you rightly mentioned, we have stopped all the private treaty business last 3 years. So we have not signed any new private treaty in last 3 years' time. But what was signed as Gitanjali, we had to close it. So it was closed last year.
4 years old. So it was, the impact was 11 crores in Q3, is it?
At 11.87, roughly 12 crores in the Q3.
Okay. And did we see any benefit of elections in this quarter?
As I mentioned to you last year also, in the last call also, generally election we get some benefit because of, but that entire benefit is taken away because the government, because of the code of conduct, is the regular advertising of government goes down. So it kind of nullifies the whole thing.
Okay. Okay. On the circulation front, we listened to another player talking about increased competitiveness in some of the markets, and Bihar being one. Could you help us as what has happened in that market in terms of the cover prices and stuff like that?
Which market you are talking about?
Bihar, Jharkhand.
Okay. So whatever exercise we have undertaken is only in Bihar, not in Jharkhand. And in Bihar, as we mentioned to you, we were present in limited districts, not in the entire 38 districts. So as a company, we decided that from June onwards, we'll work on this. And happy to announce that in the month of December, we completed our coverage of the entire 38 districts. As we speak today, we have already grown the copies in Bihar in a big way. And our final, some implementation of the copies is left, which will be done by end of February. That market saw some cover price war where the existing players reduced the cover price, which did help us move in faster because whatever kitty a consumer had with him, so they were able to push us also inside. So the duplicated reader, those who wanted to buy 2 copies, we were able to. that's a good progress in Bihar. And furthermore, I would like to add on in the circulation thing. As mentioned to you that we have already grown 6 lakh copies in last 6 months' time, and our circulation drive will continue. So we have targeted to grow another 2-3 lakh copies in next quarter itself. So we are totally committed to that, and especially we are very, very energized and encouraged by the response, because you have to understand this circulation largely is coming at a cover price which is almost 4 rupee average. 4 rupee average cover price growth increase in all these markets is very encouraging for us, that the consumer really wants to read better quality newspaper, and we are able to give that. So our growth will continue in the coming quarters also.
So YOY, what is our increase in circulation copies? Is it 6 lakh is number 4?
I can give you in July we were at 50.41, and in December we are at 56.39, 6 lakh copy. But if I compare YOY, if I take this number only of the average of last quarter, we were at 55.44 lakhs.
So YOY, it's a very marginal increase.
No. Once again, when I say last quarter means this December quarter which ended. So December end we were at 56.39, but if I take an average of the quarter, this is October, November, December, we were at 55.42.
No, so what I'm asking is, what is the YOY increase last year versus this year?
Growth compared to the last year, 6% growth.
6% growth in circulation copies.
5.3% growth. Yeah, 5.3% exactly to be precise.
Okay. Just on the newsprint prices, the prices that we have got for this quarter are lesser than our 9-month average. Now, again, we heard the other play talking about newsprint prices being on the higher side or going forward. Just your outlook on that, and can you give us guidance? Where should we expect this?
So, as of now, we are already at a price of average at 35.49 for Indian and imported, which is rupees per kg. And looking at the numbers going forward, I think we will see a growth of almost 8 to 10%. I think the number will go up. That's what we're expecting.
By next year, we mean, or by when?
No, next year, starting the Q1 and Q2 of next year.
Okay. Thanks, sir, and best of luck.
Thank you.
Thank you. Ladies and gentlemen, in order to ensure that the management is able to address questions from all the participants are requested to restrict their questions to 2 per participant. Time permitting, you may return to the queue for your follow-up questions. The next question is from the line of Neeta Khilnani from Batliwala & Karani Securities. Please go ahead.
Yes, hi, sir. So can you quantify the incremental expenses that went towards expansion in this quarter?
Roughly around 25 crores, and largely in Bihar and Gujarat.
Right. So, in the next quarter, can we expect, since I believe you've achieved most of your expansion, can these expenses come down?
Yeah, this will come down drastically.
Right. So my second question was on radio. So after 2 healthy quarters of growth, we've seen a sudden decline. So, your comments on that?
So radio, there is a shift of business in October, the Diwali season, to September, and besides that, government almost contributed to 7% in the degrowth, because post demonetization there was a major spend by the government to promote demonetization activity, and that didn't happen this year. And also because of Gujarat elections, the entire government advertising from central got depressed, and real estate got dipped by about 6% in the revenues. These two were major contributors, and that led to a decline of inventory consumption from almost 18 minutes to 15 minutes. So we have seen a rate increase of almost about 7%, and The decline again in this quarter was from October. October had a much higher decline. November, December were much lower.
So government and real estate have declined by 6-7%, these two categories.
In the overall, they declined much more. They declined much more. In the overall decline, their contribution is more than...
Contribution is okay.
70% of the decline is contributed by government and real estate.
Right. And so one final question. Any specific reason for the deferment of interim dividend?
So we took up the matter to the board today, and board has deferred it for the next meeting, which will be in the month of May.
All right. So, okay, there's no, structural change in your policy on dividend policy or something.
So that's all.
Okay. Thank you, sir.
Thank you. Before we take the next question, we would like to remind our participants that you may enter star and 1 to ask a question. The next question is from the line of Vaibhav Barjatia from HNI Investments. Please go ahead.
Hi, sir. Thanks for providing me this opportunity. So I have a question on the government piece of our government revenue piece of business. So how are the DAVP rates get decided, and what is the revision cycle for DAVP rates, which I guess probably affects even state level rates as well?
So DAVP full process where they revise the rate based on a particular periodicity, and their committee sits on it and all that. So we can explain you much more in detail the whole regulation of that. I'll ask our investor relation committee to discuss with you and give you the entire regulation. How do they go about?
Okay, fair enough. So I will probably touch base separately on that. And what's the now slightly on a longer term question from a business strategy point of view? What's your view on our entry into Uttar Pradesh, given that it's the only Hindi market, which big Hindi market where we are not present, and what's your view if you want to enter, whether by organic means, by organic route or inorganic?
So we have no plans to enter into Uttar Pradesh as yet. So we really won't discuss anything on that.
Okay, fair enough. I think that's it from my side. Thank you.
Thank you. The next question is from Ritvik Rai from Kotak Securities. Please go ahead.
Hello, sir. Thanks for this opportunity. Sir, could you tell us about the ad revenue growth in terms of yield versus volume?
So fortunately, we were having a 2% yield growth and almost 8% volume decline.
Okay. And sir, could you tell us a little bit about IRS and when we can expect some kind of resolution, because the kind of expansion that you've taken in Bihar, it's...
As we speak, the IRS is being released.
Okay, great.
So in next couple of hours, we'll have some data from them, and Bihar will get covered after 12 months.
Okay. And so what would be the, suppose this time the industry players are all okay with it, what would be the frequency going forward for IRS? Any idea on that?
What have been informed to us that IRS will release the report in every quarter.
Okay. All right, sir. And sir, just one more thing on real estate. You said the contribution has now declined to 5%. What was this number 12 or 24 months ago?
Almost 10%.
All right, sir. Thank you very much. That's it from me.
Thank you very much. To ask a question, please press star and 1. The next question is from the line of Dimple Kotak from SKS Capital and Research. Please go ahead.
Yeah, hello sir. Thanks for the opportunity. Sir, as you mentioned that there will be an increase in prices of newsprint by 8 to 10% in the first half of FY19. So what kind of pressure on your margins we will see?
So frankly speaking, that all depends how the advertising revenue goes up. And so that's one. And and also in circulation, what is the number? So we are trying to kind of mitigate some kind of numbers by the number of pages and all that, rationalizing, making more efficient and all that. So it's be too early to comment right now directly on the margins.
Okay, sir. And sir, what is the expectation for the growth in ad? Like as you said that from January we are seeing a 15 to 16% growth. So going ahead, what is the view on that?
Okay, I'm sitting on a 6% decline in this quarter.
Yeah.
So frankly speaking, I would like to hold on for a while till the time I actually show you some numbers and then give you the projections.
Yeah, so in the initial remarks, I mean, then the first participant had asked regarding the advertisement environment, and I think the answer was this: January there was a strong growth in ad revenues. Did I take it correctly?
Yeah.
Okay, okay. Okay, that's all from my side. Thank you.
Thank you.
Thank you. The next question is from Rohit Dokania from IDFC Securities. Please go ahead.
Yeah, hi, good evening, sir. Thank you for the opportunity. Just wanted to know what are the one-offs that you were mentioning as far as the ad growth is concerned. One was this, in the base, the Gitanjali Gems, and the other
ad growth is only one thing, which is Gitanjali Gems, and second thing was that shifting of the season by 11 months. So that's the two things. And other one-off in terms of expenses is the expansion of Bihar and the Gujarat and the existing copies. So that.
Sure, that is understood. Okay, and so the last question was, can you talk about what kind of print order you had in Bihar, before you embarked on this expansion?
So we were at around, okay, I think because we have applied for Audit Bureau of Circulation, it will not be wise for us to give you those numbers. It will be flaunting their rules. So we would like to resist ourselves. But what we can say currently, we are doing almost pretty good in Bihar. We should be able to give you the exact number sometime in the next quarter.
No problem. So can you at least talk about, within what range are we to the number one leader in terms of percentage, 70%, 80%? Roughly would also help.
Go a bit higher, please.
I'm saying, could you please talk about in what range are you?
Go a bit higher.
Okay, sure.
Yeah.
Got it. Thanks.
Thank you. The next question is a follow-up from the line of Vivekanand Subbaraman from Ambit Capital. Please go ahead.
Hi, thank you very much for the follow-up opportunity. Pawan, if you could give us an update on the digital business, where you were highlighting till very recently that that you are cutting down on irritant ads, which impacted your revenue growth. At what point do you think you will be happy with your customer experience and hence pushing more ads to consumers? Also, can you share with us some engagement metrics and monitorables in this business?
Okay, so we look at ComScore and we look at Facebook data. So as per Facebook, we are now the fourth most engaged content brand in the world, most engaged content brand in the country, and fourth most engaged content brand in the world. That's on Facebook. The other is that we have the highest daily active users on mobile in India. So as I said last time, our mobile is much bigger than our desktop now, and hence our entire focus on improving the user experience on mobile. So happy to share with you that as per ComScore, mobile site has the highest daily active users in India, and our focus has been on improving the mobile. The fourth matrix is mobile has been growing, and as I said, desktop continues to degrow, both in revenues as well as sessions. That we have factored in our future strategy. We are happy that people are moving away from desktop and using it on mobile, because that gives us sort of a device which people can access 24 hours, and it also helps us to get into youth readership. The challenge that we're having is the brand business, the banner advertising is disappearing, especially by the brands directly. That is getting converted more and more into programmatic, which means we will have to increase our traffic. We will have to increase the number of the frequency of users coming to our site. That's the future. There is pressure on rates because there's an oversupply of traffic or content in the industry right now, or advertising. The demand is very poor. the demand is not going up for the last 6 months of the overall industry because the mobile is not being liked by people to buy the inventory. So we are figuring out branded content solutions and more engaging content solutions. We're also building our video inventory, which also helps us put video ads before our video content.
Right. This is helpful, but just one small question as a follow-up. Despite the base being so small, just around 15 crore a quarter, why is it that we are facing so much pressure in growing revenue in a seemingly large digital advertising category? I mean, correct me if I'm wrong. What am I missing here? Because digital advertising clearly seems to be growing for the large players, but in your case, why is it that there is so much challenge in growing revenue in the first place?
So as I said, there's a transition from desktop to mobile. So the desktop revenues is, for us especially, is under pressure. It is degrowing, and the mobile is growing, but mobile sessions are growing. The other matrix, the most important matrix for us is to stay on top. So as far as staying on top, we are on top as far as being the highest daily active users on mobile in India. So we are, just to give you a number, we are almost 5 million daily actives versus the Times of India at 4 million and NDTV at 3 million. So that's the gap that we've been able to build on mobile side. And those are the matrices that we are tracking, and not necessarily the revenues alone at this point of time, because we know that the user experience and this gap in traffic will get us additional users and higher frequency.
Right. And sir, how much time does an average user spend on your website or on your app on a daily basis, if I may ask?
Yeah. So on app, it's a double digit. On a
double digit minutes per day, you're saying?
Minutes per day, yeah. Absolutely.
Okay.
Higher on a desktop, on a mobile actually it's a low, it's a high single digit minutes per day per user.
Right. Thank you very much and all the best.
Thank you. The next question is from Amit Kumar from Investec. Please go ahead.
Yeah, thank you so much for the opportunity, sir. Just a quick one on the radio revenues bit. I'm also a little bit surprised by the decline because you've fully launched 13 new stations, and those inventory would have also been added to the overall system now. So could you just help us understand what is the revenue contribution from those stations now, and correspondingly what is the like-to-like trend in radio revenues from the 17 existing markets?
Okay. So the new stations that have been added, they contribute about 15% to our total revenue. Now they're all profitable. Now Q3, the new stations have broken even. It's a bit of positive. Happy to share that with you. And on the existing stations, the legacy station, as I said, October, because of the preponement of Diwali, October was a washout actually. And November, December, the category real estate. Let me give you a number. So real estate and government. Those two categories. So real estate degrew by almost 40% and followed by government at about 30% dip compared to last year, same quarter. So because of these two reasons, and government declined because there was a huge spend by government on radio last year post demonetization in November and December. So that led to November and December. Sorry. That led to the overall decline in radio. But if you look at when we look at November, December, legacy stations are obviously doing well, and January also they're doing well as we speak.
Okay, and what's the share of government and real estate advertising on the radio side?
I'll give that to you. So the government contributes in 30 stations, both central and about 30%, 25% in this quarter, because real estate was a dip.
So sorry, both put together is 25%.
Yeah, so there are two states, central government and state government, both put together.
They put together contribute 25%, and real estate contributes about 8%. About 8% in this quarter.
Okay, government revenue contribution on the revenue side seems to be quite high. I have not seen this much On the print side, it's 13-14%, right?
Yep.
All right, understood. That's it from my side, sir. Thank you.
Thank you.
Thank you. Anyone who has a question may enter star and one at this time. The next question is a follow-up from the line of Dimple Kotak from SKS Capital and Research. Please go ahead.
Yes, sir. Sir, can you please help me with what would be the contribution of real estate and education on the advertisement side?
In the print or radio?
Yes, advertisement side, print.
Print. So real estate is around 5% in the last quarter.
Okay.
And the government is around 15%, and education is 6%.
Okay, sir. And sir, secondly, sir, in the previous quarter we had mentioned that we would be completing the expansion in Bihar by Jan end. So is it completed or is there some more expenses left for it?
So large is done, but some areas still the rollout of the copies, we have booked some copies, rollout is left. I think safely by end of February we should be done.
Okay, so what would be the incremental cost over there?
Nothing major, nothing substantial.
Okay, so okay. Thank you so much. So that's all from my side.
Thank you. The next question is from the line of Lakshmi Narayanan from Catamaran. Please go ahead.
Yeah, thanks for taking my question. Just a follow-up question on the radio thing which you actually mentioned. In terms of the legacy stations which you have, the likes of Jaipur, etc. And you mentioned that they contribute around 85% of your revenues. What kind of utilization these large stations like Indore and Jaipur, all these things operate at?
So about 15 to 17 minutes per hour, is our utilization per hour actually. So they're all sitting at. So we in peak hours we take our inventory to about 22, 23, and non-peak hour to about 12, 13. So there's still scope in some of the legacy.
So in your terms, what is the utilization blended for the legacy stations? Is it like 60% or is it 70%? What is that utilization? Assuming that whichever way you calculate the utilization.
We look at it at about 80 to 90% now.
In the legacy stations?
We look at it about 80 to 90%.
So right now you are at what utilization in the legacy stations?
Between 80 to 90%.
And on the new stations?
And the new stations are sitting at just about 50% utilization.
50%. And on the new stations, what is the kind of, you said you actually broke even within, say, 6 quarters or so, because these 14 stations have been launched in the last financial year, right? Typically, what is the project IRR you expect on these stations, especially the new ones?
A double digit. All of these stations, new stations have been planned at a double digit IRR. And as I said earlier, their current contribution to total revenues is about 15%, the new station that we've launched.
So double digit means it's like upward of 15% or lower than 15%?
No, it's 15%. It's a 15% contribution.
And what is your steady state in terms of the government mix? Because the government is
a high double digit IRR.
Sorry?
You asked a question about IRR, it's a double digit IRR.
Okay. Now, on the government side, you mentioned that government and real estate contributed to this decline. And last year, if you look at you made close to around 127 crores of advertisements revenues for radio, right? And for the full year last year, what is the split between government and real estate? And currently, if you take the 3 quarters together, it's close to around 100 crores. What's the split between government and real estate now?
Okay, I don't have the 12 months number of last year available right now, but can we offer you this offline, please?
Yeah, I'll check with Mr. Prasoon later.
Thank you.
Okay, thank you so much.
Thank you. The next question is from Rajiv Barlia from Edelweiss. Please go ahead.
Hi sir, this is Apnish here. Sir, readership survey comes out today, and this is a currency which was not there for past many quarters. So you expect the industry to see significant benefit, or you expect that only the leaders or who have expanded those will benefit? Because overall print allocation may not change just because of currency. Between the players it might change. What's the view you share?
I would actually say this will help the entire industry. Because what has happened in the last couple of years, we've been loose talk about print stagnating, going down and all that. But if you look at the ABC number, there's been a 5% CAGR of circulation in the last 10 years. And this report, as I just got the top line number, the total readership of newspaper or the print in India, the newspapers in India has gone up by 40%. Compared to 2014 data, in 2017 data, or the top line I've got, the newspapers have shown a 40% total readership growth. That's huge. So this will also motivate the advertisers to relook at the print, because in the last couple of years, everybody started talking about various things and digital became one of the things everybody talked about. I think with this, we will get a huge tailwind to further grow the industry.
There are two follow-ups there. One is 40% jump in 3 years. Obviously, in any survey or any study which comes out, sample size will be obviously different in those 3 years.
No, sir, let me explain you. This sample size, this time the IRS is doing the 320,000 sample, which is probably the largest under the sun. No survey in the entire world for any readership has been done with this size. So this is a huge survey on a higher base than it was done 3 years back.
Right. So, okay, so you expect that there will be meaningful jump because of this 40% for the entire industry?
It should be. Why? Because suddenly as an advertiser, I was thinking, no, print is like stagnating, going down or whatever. You'll be surprised to note magazines have shown a 95% jump in the total readership. So I think it's very positive report for the industry.
Sir, and the fact that it was not there, it was stopped for many quarters, and you are saying now this will be quarterly. So that issue is resolved for the reason why it stopped. You don't expect that reason to come back?
So we really don't know whether the issue is resolved or not, but last time there was some, fault in the report. People pointed out, and I hope the amount of work they have done, I'm sure this time they should not have any such kind of goof up in the report.
So your comment on elections was it's kind of neutral. Now Rajasthan, Chhattisgarh, MP, all are very key states for you, and all are going into elections very soon. And these will be extremely closely fought, going by the data which came out from Gujarat. You still share that even for these 3 states it will be neutral?
See, there are 2 ways. Now these 3 states, if they learn some lesson from the past, they may like to actually forget the election. Government may like to start doing something on the ground and tell people this is what is happening over a period of next 1 year, 1.5 years. So that should give us some benefit, provided they understand that. So we all keep talking to them. Let's see, they get some understanding on that, helps all of us.
So lastly, a lot of questions have been on advertising growth. I'm sure you must have seen Zee's growth yesterday, 25% like-to-like, Viacom 18 around 14-15% like-to-like. So, of course, your growth is very different. There are specific reasons. But sir, what's your reading? Why broadcasting is still growing much faster? I understand the advertising will be different, but in the same market, why should TV continue to grow much faster? Any learnings from their advertising sales strategy?
No, I think I totally agree with you. There's need to be further deep dive to understand that why it is happening so. So we can always brush it off saying that they're a different category altogether and all that. No, but advertiser is almost the same. So we need to understand, and we are looking at it. I think this readership data will further help, because what happens when the campaign is planned, there is no data available, and the money obviously parked in the medium where the data is available. So I hope this should also help, and you made a valid point. We are looking into it, and we need to further see how we can see that as an opportunity.
No, sir, I understand what you're saying, but this has been going on for many quarters. Initially, your pricing issue was there. You took pricing ahead of the market, and then that pushback was there. But my question is it a sector issue? So advertisers are already kind of cutting down and going towards digital, but on TV they don't want to cut because it's from visibility perspective. It seems the perception is there. So already is the sector shift starting to happen, which has happened in US?
As per the last recent report of Dentsu, and also one of the report came from Mediacom, IPG and all that, they are indicating that print is growing. In fact, one of the report mentioned that the print will be the number one in terms of advertising grosser, better than TV. So frankly speaking, I really don't agree that there's a shift in the behavior. But yes, in the absence of data, there might be some percentage shift happening earlier, but now since the data is also out, that should be arrested now going forward.
Okay, sir. Thanks a lot, sir.
Thank you.
Thank you. The next question is from the line of Alankar Garude from Macquarie. Please go ahead.
Hi, sir. Thank you for the opportunity. Just one question from my side, quite similar to the previous question. If I look at the last 3.5, 4 years, our overall ad revenues have grown by just around 17% cumulatively. This is despite the phase 3 radio auction. If I strip out radio, the growth is just maybe around 13-14%. So while I understand that there were various external factors like lack of IRS, demonetization, then this GST impact, but overall, do you think that is there something which we could have done differently? In hindsight, could our strategy on the advertising front been any different?
Very loaded question of yours. Yes, when we look at in the hindsight, certainly there are things which you could have done differently, and we have already learned the lesson from them, and we are trying to work upon it, and we are hopeful going forward we should improve on them.
Sir, it would be really helpful if you could be more specific. Any issues which you could highlight, which you could have done differently? Perhaps the yield strategy which we pursued about a couple of years back. Any learnings from the same? That would be really helpful.
Yeah. So, for example, when we did the yield agenda and we drove the whole thing in the market, I think one learning is that rather than taking that as a yield agenda, it was more seen as an internal agenda imposed on the outside world. We should have actually done some circulation work first, shown some circulation growth, what we have done this time earlier, and then gone to the market saying that we are looking at a yield agenda over there. So this we learned, and we said this time if we want to increase the rates, better to increase the circulation, increase the dominance, increase the response in the market, and then go back to the advertiser. We had some issues internally in the teams also. We were able to identify that, and we have changed certain systems in our teams also. So obviously one has done major learnings looking at the past.
Sure, sir. This is very helpful. Thanks and all the best.
Thank you.
Thank you. The next question is a follow-up from the line of Vikash Mantri from ICICI Securities. Please go ahead.
Yeah, thanks for the opportunity again. I asked this question to the company which already reported numbers in print space as well. Whether whatever data that the MRUC reports with respect to our company, are we confident this time of the processes that it has adopted and therefore not fight the study?
So I would answer it in this manner that we have seen their process, and I can certainly say their process has certainly improved from last time, a lot. Once the data will be out to us in next couple of days in detail, we study that, we'll understand that if there is an issue, we would certainly like to go back to them and discuss and see how they can resolve it, if at all there's any issue.
Okay, so that in case it is unfavorable, we as an industry can go back to...
I don't say unfavorable. I would say if the data is not palatable, if the data is not as per the process. So, see, nobody can promise you a favorable data. They can only promise you a very robust process. So we will have to see based on the data, the entire process, and if we feel there was going to be any question mark on the process, we'll go and ask them.
No, so question mark I thought should be questioned before. After the data coming out, it becomes result oriented.
We have exactly. So we have raised the question so far. They have assured us because they couldn't tell us that we have done everything. So once we see the data, we'll know whether they really addressed our issue or not. So if they've addressed the issue, there should not be any problem in the data. But if they have not addressed the issue and just given us the lip service, the data will have a problem. Then we'll go back to them again.
Okay. Thank you, sir.
Thank you.
Thank you. As there are no further questions, I now hand the conference over to the management for closing comments. Over to you.
I thank you for your participation and time on this earnings call. I hope that we have responded to your queries adequately today. We will be happy to be of assistance through our investor relations department, headed by Mr. Prasoon Pandey, for further inquiries. Thank you and have a nice day.
Thank you very much, members of management. Ladies and gentlemen, on behalf of DB Corp Ltd, that concludes today's conference call. Thank you for joining us, and you may now disconnect your lines.